Okay, to just further explain federal unemployment tax to state unemployment tax, federal unemployment tax is the one that is set. So it's taxable wages up through the first $7,000 of each employee at that employer. And it is paid at 6%. However, normally what happens is the employer is paying into their state unemployment tax. Now, their state unemployment tax is not a set rule. Every state law is different, and that state law needs to protect what is in the best interest of their state and how they handle their unemployment compensations. So that's when you have to read. So every state is going to be different depending on, again, what the problem tells you. It's the federal government that is up to that first 7,000. But like I said, it would normally be 6%, but if they pay into their state, then they're going to get a 90% credit, which means they're only paying 10%, which would be the 0.06% of the percent. But here, this little table here shows you just a snippet of our states. But you can see here, like Alabama is going to pay this percentage range on the first $8,000. Alaska is going to pay this percentage range on the first $39,900. So you can see each state is different. Arkansas is this percentage range on the first $10,000. So you need to read the problem. There's no set rule. You got to read the problem. It'll tell you what they're paying into the state. What are the contributions? Now, if it doesn't, like notice here, it says if it doesn't give you an amount, then the assumption is that it is on the first 7,000, the same as the federal. But many times it is not the same. It's something different. Okay, so then if we have over here, we have, let me see if I can just close that down. So that was just a little snippet out of the book. Again, the textbook does explain all of that. And if we were to do an example of one that has a different rate, so like right here, so like 5.3a says Garrison Shops has a SUTA rate of 3.7%. So again, that's their state rate. Then it specifically states the state's taxable limit is $8,000 of each employee's earnings. For the year, Garrison Shops had federal unemployment tax wages of $67,900 and then SUTA taxable wages of $83,900, because again, the federal is on the $7,000 set, and the state, again, according to this snippet, tells us that theirs is $8,000, so it will be different dollar amounts. So then what you're going to do is you're going to take the federal taxable income, and again, it's going to be the 6% minus the 5.4%, which is the credit. So if we had the 6% is our FUTA rate, and then minus the credit, then you can see that our rate that we actually pay is going to be just the 0.006. So these are my totals. So let me come back to these. All right, so if I go back to that problem, the problem was $67,900 for the federal, $83,900 for the state. So again, you could just put these into your calculator, but I can't. I don't have the calculator up to show you. So if we have $67,900, no, sorry, that was the federal. $83,900 for the state, and the state tax rate is 3.7%. That would give us $3,104.30 that they'd have to pay into the state unemployment. Then the $67,900 goes to our federal wages, And like I showed you here, because they're paying into the state, they really only are paying the 0.6%. So then now if we take that total and we multiply it by that 0.6%, that's going to give us the amount that they would pay our FUTA. So then that's what they want you to understand is, again, that you get the credit when you pay and that you're going to pay whatever the state tells you to. And then so a lot of these, again, and you can go into, whoops, that takes into problem set B. But again, you could go through problem set B on any of these ones that I've done in A, go over to B and do, do the same. And then here again, this shows you that this is an multi-state company, so they're going to have to pay taxes in Massachusetts, New Hampshire, Maine. But you can see as you look at those, each one of those levels is different. Each one of those rates is different. There's no set rules for the states. You always just have to read carefully. And then again, just know your limits and what it tells you. So here we've got some totals, because again, you may have to start. Oh, and then some of these will get into specific payments, like, so do we pay unemployment on a director who attended director meetings? No, you're only going to pay it on your employees. So like the factory superintendent, he would be taxable. So you got to go kind of look back through those lists when you're looking through some of these to read. And again, like as I read through these, though, again, they're just giving you different amounts, taxes for each state, and different amounts subject to those states. So again, I feel like you just got to read careful. The math shouldn't be hard. It's just kind of figuring it out. Or maybe some of the tricky part could also be, is it something who is not someone I pay taxes on, or like that board of director. So I think that's the key. To me, the key is you have to understand that the federal is set, and then if you're paying into the state, you get that 90% tax credit. And then the state, you just have to read carefully as to what they tell you. And again, though, refer back to what is not subject to unemployment tax and what is, because sometimes that depends. And then the rates are sometimes different for the type of employee that they are. So those are some things to kind of double check. Again, if you have any specific questions, please email me.